Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. Let's see, what do we got going on here? Oh, wait a minute, we're not. Oh, let's see what we got here. Why am I not? I'm confused. Let's try that again. Aren't I streaming? Oh, there we go. All right, there we go. Now we're up and running. News is coming out. We're going to have some, inflation numbers. It should be jumping out any second now. We'll see it. Oh, it's already jumped out. You can see stock market has backed off. The Fed kept it perked up. There we are. So the Fed kept it perked up. They were holding it steady. And there's nothing major, the S&P 500 dropped about 25 handles. Looks like it dropped almost 30 handles from where it was, but overall, it's only, the Dow is getting ready to start to roll over any second now. And what else we got going? I imagine we'll put another push down, just to see what the numbers itself say. Let's see if we can find the numbers. Number. Let's go over and take a look at it on, let's see, we'll go like this. They're bouncing slowly back now. Let's see, trading, and let's see what Dukascopy says about an online calendar. Here's the numbers. Okay, so it was up 0.5% versus 0.3%, so just a little bit warmer, as they would say, or hotter. Dow's down only about 120 points or so. That's just background noise. It's only a quarter percentage point down. It's not big. They like to get excited. Oh my God, the Dow Jones is down 100 points. It's like, it's only a quarter percentage point. I remember a time when the Dow... See, you know why they get excited? Here's a good example of why they get excited. So, April producer prices were up 0.5 versus 0.3. Okay. But one of the reasons why all these talking heads get so excited is back in the day when I started on the market, if the Dow was down 100 points, that was down over 10%. That was a 10% move. So they're still kind of... they only read, I guess you could say. They don't really think. And I guess you have to think to read on some level, but that's why they get excited over the most ridiculous things. Like the Dow now is down 20%, 20 tenths of a percent. In other words, basically less than a quarter percentage point, down 75, 80 points. But they get excited. They see it down 100 points, and in their heads they're like, oh my God, stock market must be down 10%. Because they knew at one time it was down 10% when it was down 100 points. Now you can see we have the intraday up on the screen, and you see it slowly climbing up where it'll be almost unchanged before you know it. The Fed will come in and purchase. They'll do their thing. April year over year is unched at 2.2 versus 2.2. So. Nothing major there. Just that we've been warning everybody here on the webinar for 6-7 months now that inflation is going to slowly keep on. It's going to be stickier. How's that? We'll talk as we're in a hedge fund. It was going to be more stickier than it was last year. How's that? And that's really what it comes down to. It's stickier more than it was then. I guess you shouldn't put it in your mouth and then pull it out, because then it gets really sticky. So that's pretty much where we're at the moment. You can see the Dow Jones Industrial Average is down about 34, 35 points, down 1/10 of a percent, not even a quarter percentage point. And they all get excited. Oh my God. We're talking about how it's just marching up. You can see it here on. So we could move it over. There's Tuesday, and let's see what it says there. There we go. So it's got the producer's price in there. You can see that they were expecting forecast and an actual. Oh, let's see if they did a change on the previous too. Let's see if previous changed. And it doesn't really look like it. 2.1 versus 2.2 possibly? Huh. Alright. As you can see, the stock market is relatively quiet. How much is it up or down for today? Let me see. Let's just take a look and see. I don't think it's up or down that much to begin with. The answer to that is down 10 points on the S&P. 10 handles, 9 handles. Okay. Ah. So the revision showed 2.1, and so overall that's pushing it down to 1.8. Okay. So tomorrow we'll see the CPI. That's the one they seem to be more concerned about at the moment. Let's take a look and see what the forecast is for tomorrow on the CPI. CPI tomorrow, they keep on saying it's going to be hot, 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 hot. All right, so CPI, Consumer Price Index, is they're expecting month over month. They're looking at 0.4. That's what they're looking for. Is it 0.4? 3.8. I guess 3.8. So we'll see where they're at tomorrow. You see the stock market just still climbing. It's not, they're looking at that revision and thinking, okay, that's cool. Dow Jones Industrial Average is feeling a little more pain. Nothing major. It's down about a 15th of a percent. It's not down 0.25%. It's down about half of that. So it's still not that intense, not that intense. The S&P 500 is down about 17th of a percent, not even 0.25%. And NASDAQ is actually up. And that usually works that way too, because the employment number, or I'm sorry, the inflation number, helps the interest rate. Look at that; it's trying to get into the plus. Like I said, the Fed will make it get into the plus because the markets are so quiet now that there's no reason for much action. I think they're looking down the road 6 to 9 months. So everybody's just waiting for more confirmation. How can we tell Mr. Trump is going to win? That type of thing. Markets do not want to. Let's see. April core year over year 2.4. April 0.5 versus 0.3. Yeah, so they're looking for just confirmations that Mr. Trump will win. They're trying to find, and he's leading in all these states, and he's up 9-10% in a lot of these states. And Mr. Biden is getting beat up statistically, so that makes the markets feel more comfortable. And it's at the same time the Fed, that's all the Fed cares about, as long as the market stays up, because then they don't become liable for all that insurance that they have to pay to protect banks going under and so forth. And if the stock market's staying up, then investors stay involved buying stock and will buy their bonds, their corporate bonds, and it makes life easier for the Federal Reserve. All right. All right. Now from there, we're going to drift over to the dollar index, see how that looks this morning. And there's the dollar index there. Let's put the dollar index up over here. Ooh. There's the dollar index. Kind of a little flatted down a little bit. Was trying to get into the buy today, but just on the edge. You can see it's 0.02. It's very close, just hanging out over in here. You can see that. Just very tight market. They're thinking CPI will be up in the fours. I guess they're talking about it year over year. They think that it's growing towards 4.8. They think it's on the path to basically about 5%, which that's where the bonds are at. That's where the 10-year and the 30-year and all that stuff are hanging out in the 4.5%, 5% area. The 6 month and 1 year are hanging out over the 5% area. So it doesn't surprise me any. All right. Now from there, where do we go from there? Let's see. I want to find Amazon. Let's see where Amazon is. They're looking at the service industry, and that's costing more. Amazon's down a little bit more today than yesterday. Starting to pierce that 85 area. I think we needed to get down to the 80 area, something like that. We suggested buying puts all the way up to here, so it's probably moving back into the safe zone. We'll see. We're still in that weekly sell on the Amazon for 5. This is the 5th week now. This news should help. Should help the techs, but like I said, I see the what do you call it, the Tech 100 up a little bit today, but just up a couple points, nothing major, and we're seeing the S&P 500 down just a couple points, and last we saw the NQs or the Tech 100, they were up a couple points. So it's a quiet, steady market. It's doing what the Fed wants it to do. It's slowly climbing up. And that's the name of the game there. Pause. Okay. Let's see. There's a lot of reasons to believe that the markets will go nowhere between now and November. And they'll go sideways, and as long as they stay firm, that's all the Federal Reserve really wants it to do. It doesn't really want it to, sure, they would be happy to be a nice big move up, but at this point, they would just be happy if the markets just sat still and didn't go anywhere. And this way, at least they could say, oh, we're only 2 percentage points off of all-time highs, that type of thing. At one point, maybe even get the Fed to try to jack it a little bit going into October. Wouldn't be surprised if they do something like that to try to help out a little bit more on the election, but we'll see. All right, so from there, let's zip over to, we were looking at there's the dollar index, and you can see here playing with the weekly. We can see the daily is trying to hold on the upside. It's just by a hair. We'll see by the end of the day. And then at the same time, we go over to there it is right there. This is the euro. That's cable. Let's put euro in there. There's euro. It's at the highs of the last, I guess you could say the last 20 days, something like that, since that big sell-off from up in here. You see it's trying to take out this high right there. And they take that out, and then it's they're probably looking for the blue line at that point. You see the weekly's up very firm, up through the manifold. So the euro is definitely showing lots of life to it, on that strength there. I would assume, this is what I would assume when I see the power in the currency pairs. I would assume what we'll see is the markets are going to try to keep on firming up, but stay steady. I assume that's the way it's going to play out for a long while. All right. Oh, and because the euro is moving up, maybe money is trying to come in a little early into Europe, and maybe doing a little buying. So we see buying going on, in the euro where they're selling dollars, buying euros, to be able to invest, try to do a little investing. Got buy low, sell high. Right now, Europe is low, so it makes sense to think that there would be money managers thinking, it's time to allocate a little bit more money over to Europe. It's not like they're throwing America away. They're just trying to find other places that they can make money in. Let's see. From there, we'll take a look at cable. There's cable. And you see that action going on there. It's 3 days in a buy now. And also piercing up through the weekly buy for a second day. Lots of strength. And they've been looking for, we've been looking for a stronger currency pair, weaker dollar. It's trying to do it. We've seen the Swisses even, rolling over. So, we. Okay, they are. Huh. This will excite them because when they revised the March PPI. There we are. There's Swiss right there. Swiss was in a sell and tried to jump into buy, and looks like you can see the weekly's trying to get into the sell. Let's move that zero line down like that. Huh. Did it get in the buy there yesterday? I think it did, didn't it? Look at that right there. Closed in the buy. There it is. So we slipped into the buy. That's a little surprising. I thought for sure with that weekly going on, I must have not. Did I? I think it's on the spreadsheet. I thought it stayed in the buy, or I'm not sure now. We'll have to check on that. But there it is, going on a second day into the buy, but a weekly sell playing with it. Interesting. I really just expect us to stay in this range. Sideways chop. Wow. Okay. So they're thinking 0.4% increase more than they were anticipating in CPI tomorrow. Huh. Wow. They're still analyzing it all. It's always interesting when I'm doing the webinar and they're analyzing at the same time. It's always interesting to see that. Let's see, because I end up listening to some of the things that make sense. Let's see. From there, the Swiss, we'll go over to the yen. Yen inching up a little bit more. It's losing against the dollar. And you can see that in the daily buy now for a full 6 days, and obviously the weekly has been in there for 9 weeks now. Huh. There. So there's the yen. What else can we say about the yen? We can say one thing for sure is that the I did see the Nikkei. I think it was up. Let me just show you where the Nikkei was. Yeah, Nikkei was up, still in the sell, but up. Let's see, where is it at? There it is. You see it in the sell, and you see it's got a red dot, so it's having its issues. And they're trying to lift it up looks like it's actually trying to turn on the weekly, which could be very scary. That could be very, very scary. All right. From there, we go over to the great experiment, and that is the Turkish lira. There it is there. Showing a little firmness again today. The weekly, just going on, starting a second week now in the weekly buy. And shall we take a look at the stock market? There it is right there. Still hanging out up in the 43 areas. Only down about 4 points, something like that. Dow's down like 3 points. The NASDAQ. Let's see if we can put the NASDAQ up here. There's the S&P. See, it's just hanging around, down just a little. Down 2.25 points right there. Right there, down 2.5 points. So the pressures, you can see the weekly is trying to turn. It got close yesterday at one point, and then they sold the market down in the second half of the day. Let me see. Let's go back to the intraday, and I can show you what they did to it yesterday. So we got up, I think we got up as high as 60 something. There it is right there. We got up into the 60s after the webinar. And then they took it down to the 40s, dropped a full 20 points, went back up to the 50s, and then dropped down to below 35. Today they took out that 35, got down into the 17s or 16s, something like that, right there. Is that the low is 1675, and now we're back up to 43. So it's not, they're not, just the initial push down. All right, so from there, you see the Turkish lira doing a nice job of staying in that sideways channel. And we head over to the South African rand, because I think I've seen gold up. Now that was odd. Yesterday, they all the way up until about, I guess, to the exchange closed, it was in a sell, and then they turned it around. I guess you call that painting the tape. That's what they call that. They painted the tape at the end. There it is right there. So, see here, it's in buy still. Yesterday, this was down below, and it pushed it underneath, but by this evening, or late last night and going into the day, they straightened it out. They changed it at the exchange. So you can see here, we're still flirting with a weekly sell, but you can see right here, the daily is still pushing up. All right. Let's take a look at the South African rand. I saw it this morning. It was down at the low end of its range still. Right there. Still down there, up a little bit, but nothing major. And we've gotten locked in around the 1835-45 area, and 1850 bounces around in there. And with the South African rand having that nice big long downslope, we would expect a nice big upslope in the gold, and it's been very hard. It went into that push down here, and gold went down instead of up. Now gold is trying to throw in a bottom. I guess interest rates are not scaring it too much. And I would imagine until the election, this product should stay firm, very firm. Maybe there'll be a little profit taking, but overall, I would think that we'll see the metals market stay very firm all the way up to the election. Just solely because it's a good defense to uncertainty. Who knows what shenanigans can be played? That's what it really comes down to. That's what people were saying to me yesterday. Who knows what games they will play? All right. Let's take a look at silver. There's silver. Silver's still pushing up. Looks like it wants to go run after that 30 area again, which is really nice. That'll only make it down about 35% from all-time highs, compared to gold trading 4% away from all-time highs. Something like that, 6%. And then there's copper. Copper's up over 9% now for the month. I guess that's 9%. Yeah. Now Nasdaq's being pushed down, which is curious, and the S&P 500 and the Dow Jones Industrial Average are lifting up. And you can see there, copper is looking very, very firm, like the silver. And then the platinum, the great dangerous short, another new high. Where's that at now? 10.25 now. 10.25.5. Keep on watching that. Platinum finds slow ways to go up. I don't expect it to explode. I just don't expect it to be leaky, weak. I just expect it to stay firm. Are we getting housing starts? Oh, we're getting house starts today. I guess they're doing mortgages over 7% again now. So that is the metals complex. You can see the platinum seems to be doing fine with that. And that's the one to watch. That is the canary in the coal mine. It was so hard to believe that money wasn't paying attention to it for so long. But I think they're starting to wake up to the fact that it's not something you want to be short. All right. And then from there, we go over to the energy side. And there's crude oil. Crude oil tried to lift up yesterday, pushed itself into a sell. It's a little bit down today. In a weekly sell now on a fourth week. There's not a lot of passion, or let's say conviction. There's not a lot of conviction to step up to the oil. We're in the 70s, the high 70s, which is nice. I finally seen some fuel for a gallon or a liter come down a little bit, just a little bit over the last 24 hours, which is really nice. I guess they're trying to stir some interest. The road sometimes can be pretty quiet. And let's put it up over here. There is crude oil, still breaking down also. And what else is there? So that's the crude oil, and we're in that weekly sell, as you can see right there. And we'll go over and take a look at Brent. There's the Brent. Brent, same way, down in the sell for a couple of days. And you can see crude oil trying to drift down. I think I saw natural gas trying to turn over. And a little bit. It's pushing. You see it's pushing down a little bit today. And it's still in the buy. You can see that right there on the daily buy from yesterday, probably in a buy today. And you can see here the weekly, still in the weekly buy. Was it 5 something like 5 out of the last 6 weeks? It's in a weekly buy. There's a controversy about the watch on Mr. Biden's arm. They just mentioned it with like 10 seconds left in the TV show. All right, and then last but not least, we go to Spain and take a look at the energy sector over there. There it is. And this morning I looked at it just to see what was going on, and it's been up in the 25s. Yep, see, it was through 25. Now it's below 25. They've given it a good push up, that's for sure. Let me think. Now it's better. The mic got pulled out. There you go. We should be able to hear that in a few seconds. There it is. The mic got pulled out. That's what it was. All right. So what do I want to do? I want to put this article up. There's a couple of interesting articles today. And let me just move over to the, put that right there. There we go. And let's get the articles up there. There you go. So you can see the intraday market drifting down a little bit. Nothing major there. And let's put, where is it? Right there. And so it shows I thought it was interesting to look at the robot production. In other words, that they're using so many robots now around the world, and it shows how all the countries are doing in the robots. So I'm going to throw those up on the screen. Let's see, right there it is, right there. Let's get that article up there. There it is. And then let's get the other one up there too, where they were looking at the interest rates in China. There we are. Is there any? There was no Japanese articles, but they are, let's put it this way, they are crying. There's no doubt about that. Okay, I'm all set. Let's switch over again. Okay, there we are. There you go. First one was, that's the Chinese one, but I want to go back to the robot one first. It shows all the robots. There it is. And you can see there, this is countries with the highest density of robot workers. Numbers of installed robots per 10,000 employees in the manufacturing industry. So they went from like 710 to 10,000 to almost 10% now when you look at South Korea. Germany's up to 415, Japan 397, China 392, Sweden 343. So it's interesting. South Korea is really modernizing when it comes to the robot situation. And we see it in the Kospi. The Kospi index is definitely a strong index. Over here, you see this article here is an interesting one also. This one here is China's total social financing. And it has a wonderful chart showing your first negative print in 19 years. I guess that's the red line. See, you can see there. So it's, there's a lot of, China is going through a lot of changes with X being president for so many years now. He's got a whole different philosophy, and that kind of makes things a little bit tougher. Whereas the other premiers were trying to go towards capitalism, he's trying to move back to communism. But you can see, look at the volatility back and forth like that. It was, yeah. So I thought that was interesting to see those two. The only way we can ever tell what's going on is data. We need data, and it's very hard to see what's going on outside the United States, inside China, without being able to see data. So let's take a look at the Kospi, right there. And there's the Kospi, and there it is right there. You can see the. Let me get rid of that headphone set. There we go. You can see that it's flirting with getting into the buy, but we're still been sideways down, and we've been in a sell for like 4 days now. And it's just starting to close up a little bit higher, but it's holding up pretty well. Let's see. Let me put it up on one other chart system to be able to give you that long-term perspective. There it is right there. I'll make a copy of that. There it is right there. You can see over the last 5 years it got up to over 3,300. It's at 2,700 now. So they're making a good move back, and then we go look at all-time highs. That 3,300 is the all-time high right there. And it's trying to move back up. You can see it's beaten all these highs except for the major one now, which is very impressive. Now, obviously, when we go and look at, say, the Chinese market, let's go back over to there. Right there. And you can see it's been very firm also over the last couple months. It's in a daily buy for a long while, weekly buy for a long while. It is making a nice move on the upside overall. But when it comes down to the longer term view, there it is right there. You can see in the 5-year situation that it ran up into the 3,700 area. We're at the 31 area. Not bad, not bad at all. Problem is that this where it's at the 37 area. I guess that was the same area that the Kospi was at all-time highs. And unfortunately, when we look at the Chinese indice, the all-time highs is close to 6,000 right there. So this action in here is just too far. Right in here, this action there is too far from this high and this high. So I was expecting, when I saw the headline on that article, I think it was like China and South Korea. I was kind of thinking that it was going to be more of a positive article. Let me see if we can go back to it again. But I really thought it was going to be more of a positive article. Let me see where the headline is. Chinese broadest credit metric no, that's not it. It's the robot one I'm talking about. Right there. Right there. Yeah, countries with the highest density of robots. It says South Korea still dominates the world, the highest density of robots. It says China, huge investment in industrial robots has made it one of the most automated nations in the planet in the space of just a few short years. Yeah, see, that's what caught my eye. I thought, oh, okay, it's going to show us something. But when we go and look at per 10,000, obviously the Chinese market is not as big. I'm not sure why that is. In other words, the headline made me think that it was a competition between South Korea and China, and it's not. Obviously, China is, or not China, but South Korea itself is just dominant in that area. Over 1,000 per 10,000, 10%, whereas China right there is 392. Germany has 415 and Japan has 397. So I didn't even see. There's the U.S. 285. But I just thought it was going to be a better article. I didn't think it was going to be a negative one. All right. So from there, we zip over to. Now we basically showed you the Hang Seng and the Kospi. Let's go over to the Shanghai. Oh, let's see the Philippines too. Where's the Philippines? There it is right there. There's the Philippines. Philippines trying to climb up a little bit today. Nothing major. You see the daily has been in the sell for weeks. And we're trying to get into a weekly buy. We're working on that weekly buy over there now. We'll see how that plays out over the next couple of days. But it's been in a weekly sell for 10 weeks. Now you can see here we should take a look at this and see what like the 5-year look is when it comes to the Philippines. There's the 5-year. So they're not bad, it's hanging around that area, over the 6,000 area. 7,000 I guess is like the medium range, and let's take a look at all times. All times are up around the 8,000. So it's only, what is that? It's about from 6,600 basically to 8,000. You're only looking at about a 12% off. The only one really getting, whoa! Look at the U.S. stock market. You have to check this out. They're giving it a push again. Push, push, push. Yeah, the Fed loves the U.S. stock market. Let's put it up on the screen. There it is right there. Look at that push up, huh? It's like they don't really want to sell this market down. They need to keep it firm. They got, the last thing they need is another bank to go under. We just had one in the Philadelphia region just recently, in the last 2 weeks. They need these stock markets to stay up, so people will buy the stocks. They'll buy the corporate bonds. They need that positive push. So the Fed is out there doing it. I understand Mr. Powell is speaking today too. Goodness gracious, we have no idea what ramble he's going to come up with next. He'll probably be one of the first to tell you how great the PPI is today because it showed that it's backing off. He'll literally probably come out with a statement. He'll actually probably say something like, "We're seeing the sign of inflation backing off," because tomorrow, the CPI is supposedly so bad, he's got to do something positive today. So he's got the boys on the New York trading desk buying stock. All right. From the PP. Oh, let's go over to the Hang Seng. There it is right there, the Hang Seng. Hang Seng has been really riding nice. We should take a look at that on a further, because it's had a really great rally compared to any of the Asian markets. Paste. There it is. There's the 5-year. It's showing that it was up around the 31,000. So it's playing around with 50% off like the Chinese market. Let's go take a look. Let's see, where's it at? Let's take a look at all-time highs. Yeah, so the all-time high is in the 32, almost 33,000 area, and the product is trading in the 19,000 area. So it's like the Shanghai. It is feeling the pain, but it's outperforming it. I guess that would be the good pairs trade. All right. Okay, there we are. What else we got brewing here? We got so these two markets are probably the worst at the moment. Yeah, and let's see what the Singapore Straits Times is doing. There's Singapore Straits Times trading around the 3,300 area. Let's take that and see what it looked like 5 years ago. There's a 5-year. 5 years it's been up in this area. That's where it was 5 years ago, at 3,400. Let's go take a look at all times. 3,800. So, the Kospi doing a good job. The Nikkei. Obviously Nikkei's up because of the inflation more than anything else, but they're up. And we're just like us. We're up. It's not. Our earnings. When it comes to the price of stocks, a lot of it is earnings and dividends, that type of thing. And there's no doubt that we are seeing good numbers coming in quarterly. So they're not trying to take the markets down. They don't have an interest in pushing them down because they're paid to be invested. They're not paid to just put money in a savings account. All right, and then let's take a look at from there. We'll go. We've seen that's all the Pacific, I guess you could say, and then let's go over to the All Ordinaries Index in Australia, right there. Start flirting with the Indian Ocean, and you see it's down a little bit, nothing major. We should take a look and see what the all-time high in the that is too. There we are. Now they're showing like 5-year high is 8,000. Well, you know what? That's not that far off. 7,996 versus 8,000. That's not that far off at all. Now let's see what the all-time highs is. I mean, they're right around the corner. Yeah, so they're flirting with all-time highs as we speak. And then we go over to the NIF 50 in India. Stay on that Indian Ocean thing. It's here somewhere. NESI, where are you? You're right, there it is right there. And we're looking at 20, where are we at now? We're at 22,200. Copy. Let's see where the all-time, or let's at least put it in there. Let's try that again. Copy. There it is. It's not that far off. 22,300, say. And we're looking at... this seems odd. There's 22,800. Let me go back to it. That's 22,680. Let's do this. All time. So we're flirting with the all-time highs there too at the same time. 800 area, right around the 800 area. There's the all-time high. I think that's it right there. 22,458. So we're right on the edge. Very close. A lot of these indices are doing pretty well. You know, I mean, remember, stocks are a good hedge for inflation. So they are holding on to the stocks. And obviously when inflation starts to back off, then you'll see companies start to, people will start to move a little away from them. You know, I mean, they're going to hold on to them and they're always going to be buying them. But the thing is that it starts to take profits. That's what it comes down. Diversify. You know, move into other sectors. Oh, you know what we didn't look at is the that stock in Spain that follows the energy market. I saw it this morning trading in the 25s. I'm going to take another peek at it. There it is right there. And there it is there. It's flirting with the 25 area again. Right there. It got through the 25 area right there. Not only did it run up to it, it drifted through it. And we've been in a buy and a weekly buy for a while there. Just thought we'd just show you that. SPY. Oop, not yet. They haven't started to give us the today's market, so we're not seeing that. But we can see it in the S&P future. And obviously you've seen... Oh, let's do this. We'll do Europe because it's getting, the clock is ticking down. So let's take a look at the DAX. The DAX is doing the same thing. It's playing around the all-time high area. You know, it's just like the FTSE is doing. A little weakness this morning, nothing major, and it's daily buys and weekly buys. And then CAC 40 in Paris, same situation, daily buys for 5 days and 2 weeks in a weekly buy. So we see that strength in it, and you can see it ran up to this high area. Let's take a look and see where the all-time high is for that. Okay, yeah, it's definitely at a 5-year high, that's for sure. An all-time high, yep. So that's through the all-time high, just like the way the DAX is doing it. And the FTSE is doing the same thing also. We're seeing that same strength in the FTSE, playing around with all-time highs. Right there. I'll just show you that one. Yep, that's the 5-year high. And that's the all-time high right there. So they're up there buying. And you know, the United States, we're the same way. We're only 1% away from all-time highs in most of our indices. The Russell 2000 is probably the weakest out of the 4. So, what title should we have today? I guess that's we should say something about, I don't know, what provocative type of conversation can we say about today's market? I guess what it really comes down to is we know that these markets don't want to go anywhere. They want to stay steady. They're leaning into the bullish side because they see the polls. And so, you know, I keep on mentioning how the markets are steady and they're looking forward and, you know, all that. And let's see, what can we use as a title? We need something snappy, you know, something interesting where people would care to look at. So let's take a look and see. Title, Title. There we are. And then let's find something that we can say something fascinating. Euro playing with weekly buy. That's for sure. Maybe worth talking about that. That's for sure. Euro pair trading strong. How's that? Bullish. I like that even better. There we are. Euro pair trading bullish. There we go. So that'll be the title for today. Because it has, you know, and I'm going to go back and show you real quick. But we got that weekly playing with it itself. See right there. And the same thing with cable. Cable's doing the same thing, showing that lots of strength there. These two, the major currencies, the alternatives, which is kind of interesting because these things are lifting, and the second most active currency behind the euro is the yen. And the yen is, you know, losing money against the dollar. And in the Swiss, which was, you know, is below the cable in activity, is reflecting a little weakness, not much, but I think it's going after the weekly sell though, isn't it? Let's just take a look again. Yeah, see, it's playing with the weekly sell. That's bullish. You know, that's showing some strength on the weekly level. The daily is a little sloppy there. All right, traders, we're out of here. So this is Doc from North America. We'll catch you all tomorrow on Happy to Hump Day. So happy trails to you until we meet again. Happy trails to you. To all our trading friends, later, traders. Catch you tomorrow. Ta-ta for now.